V. Investing feels complicated, right? So many charts, so much jargon. It's enough to make anyone's head spin. What if I told you there's a simple 3-step strategy that makes it almost impossible to mess up? Seriously, this is the exact approach that can turn investing from a source of stress into a powerful tool for building your future. Forget trying to time the market or pick the next big stock. This is all about simplicity and consistency. So, what's step 1? It's called dollar cost averaging, or DCA for short. It sounds fancy, but it's incredibly simple. All it means is that you invest a fixed amount of money at regular intervals, no matter what the market is doing. Maybe it's $100 every month, or $50 every 2 weeks. The key is consistency. When the market is down, your fixed amount buys more shares. When it's up, it buys fewer. Over time, this averages out your purchase price and removes the stress of trying to buy at the perfect moment. Just set it, forget it, and let the system work for you. It turns market volatility, which scares most people, into your friend. Step 2 is all about what you invest in. Instead of trying to find that one needle in a haystack, that one stock that's going to the moon, we're going to buy the whole haystack. How with low-cost index funds or ETFs? Think of an index fund like the S&P 500. It's a single fund that holds stocks from the 500 largest companies in the US by buying just one share of this fund. You are instantly diversified across a huge portion of the market. You're invested in tech, healthcare, finance, consumer goods, all of it. This diversification is your built-in safety net. If one company or even one whole industry has a bad year, it's balanced out by the others. You're no longer betting on a single horse, you're betting on the entire race. This massively reduces your risk and historically has provided solid, reliable returns over the long term. Now for the final, and maybe most important, step. Think long term. And I mean really long term. We're not talking about months, we're talking about years, even decades. Investing isn't a get-rich-quick scheme. It's a get-rich-slowly plan. The market will have ups and downs. There will be scary headlines and moments of panic. Your job is to ignore all of it. Remember, you're dollar cost averaging into a diversified index fund. You have a system. The magic ingredient that makes this system work is time. Time allows the power of compound interest to kick in, where your earnings start generating their own earnings. It's like a snowball rolling down a hill, getting bigger and bigger on its own. The biggest mistake people make is panicking during a downturn and selling at the worst possible time. By committing to the long haul, you ride out the storms and reap the rewards on the other side. So, let's recap the impossible to mess up strategy. Step 1. Automate your investments with dollar cost averaging. Pick an amount, pick a schedule, and stick to it. Step 2. Invest in broad low-cost index funds or ETFs to instantly diversify and lower your risk. Buy the whole market, not just one piece of it. And step 3. Play the long game. Get your money time to grow and don't let short-term noise distract you from your long-term goals. That's it. No complex charts, no stressful decisions. Just a simple, proven system that puts your money to work for you. This strategy isn't just for Wall Street experts, it's for everyone. It's how you can confidently build wealth over time without losing sleep over it. Thanks so much for watching. If this video helped demystify investing for you, please hit that like button and subscribe for more simple finance tips. See you in the next one.